So now we are at the GST HST filing checklist, and you'll see that the very first item is month-end checklist completed to GST HST item. So just as a reminder, before filing HST, we want to make sure that all of the paperwork is entered. We've reviewed the unpaids. We've looked at the profit and loss comparative month over month to make sure we haven't missed anything. And we do this balance sheet review. We just did that. And importantly, we've made sure that the owner's draw contribution transactions have no GST HST on any of those transactions when it's been an unrelated to business transactions. So there is an item that maybe could be on the GST HST checklist, but all that to say, we've done our month-end checks, and we've even sent our questions over to the business owner, or we've reviewed our own situation if we are the business owner or we're the office manager working in and on the business. But we've made sure we've cleared any bad debt, and this now brings us to the GST HST section. So now we're flipping over to the GST HST filing checklist, and we've reviewed the file just to make sure that everything is in and up to date. Bank feeds are all cleared. Banks are all reconciled, and there was even the credit card where we didn't have a statement beyond the 16th of June. We cracked open that reconciliation just to make sure there were no uncleared items, and there was nothing in there that had to be resolved. So we've done all of our month-end checks, and now we're going to go ahead and go through the rest of this GST HST filing checklist. Before I dig in, I'm actually going to plant a few things for us to find. So I'm going to plant 3 things for us to find. So first of all, I'm going to go to an invoice here for Mike Check. And I am going to come down here and I'm going to add a couple of things to it. So one of the things that I'm going to add is, let's say she had to get a building permit. Sarah had to get a building permit, and she rebilled her client for the building permit for $150 and thought, you know what, that is out of scope for HST. There's not any HST on that because there was no HST when I got the building permit from the city. Well, here's the problem. She's not the city. She's rebilling for a cost, and because of that, she actually does have to charge HST. This is actually something that I see quite often. So what I've seen in the past is a commercial landlord charges their tenant for property tax or charges their tenant for the water, and because they don't have to pay sales tax on property tax or the water, they don't, when they rebill it, they don't collect HST on it. But CRA is still considers like rebilling a type of revenue, right? Because you can mark it up, or you may mark it up, you may not, but CRA in that scenario would consider it part of that rental revenue of the commercial tenant. So in this case, this building permit is not coming directly from the city or town to the client. Sarah picked that up, and Sarah is rebilling for it, so Sarah needs to charge HST. So we're planting this and saying that she said out of scope. Let's say she also sold him a gift card. So let's say gift card sales, and she sold him $100 worth of gift cards, and she said that is 0 rated. Now, gift cards, they're not actually revenue. Gift cards are almost like sort of cash that you can only spend here with me when I actually sell you something. So it's not actually considered revenue. It wouldn't be 0 rated. It would be, this one is the one that would be out of scope. So this is one of the plants that we're putting in. I'm going to go ahead and save and close. Now the next thing I'm going to plant is, a lot of times we'll see deposits go in, And because on the deposit screen, you can choose what type of sales tax applies to what's going in the bank. Sometimes people say register cash, that is 0 rated, or maybe they'll say that is exempt. So we're going to pick exempt here. So the problem with exempt and 0 rated is those things still apply to revenues, right? So an exempt revenue could be something like daycare, right? It's revenue, but it is not subject to HST at all. In fact, a daycare that only provides daycare services, they can't even register for HST. They're completely exempt from it. But it's still a type of sales, still a type of revenue. And the problem with 0 rated HST is it's still on a specific type of revenue. So for example, if you're selling honey, or if you're a farmer and you're selling eggs, these things are subject to 0% HST, which means you actually can register for HST, collect 0, but then also file to get the HST back on the business expenses that you've paid out. So both exempt rated sales and 0 rated sales, they indicate to QBO's HST filing module that this amount is a type of revenue to be included in line 101. The GST HST filing module does not look to see what the account is. It just looks to see what sales tax item you've selected on the total amount. And the reason for this flexibility, the reason we can do this is because we're not always collecting HST on revenue. A couple of examples are if you are in the hotel industry and the jurisdiction you're in is requiring that you collect hotel tax or municipality accommodation tax, that's a liability that you have to pass on to the town or the city. But as per CRA, you still have to collect GST, HST on those municipality and hotel taxes. So that is an example of an account that's not an income or a revenue. That would be a liability account that you have to collect HST on. Another scenario is if you're selling a business asset. So if you're selling a business asset and you're registered for GST, HST, you have to charge GST, HST on that sale. And again, that would be a sale of something that isn't revenue, but something on your balance sheet, an asset on your balance sheet. And this is why QBO allows for that flexibility, because line 101 sales isn't always just your revenues. So we've planted this incorrect sales tax allocation. I'm going to go save and new, and I'm going to give an example of just one more plant for us to find. Again, it's going to be a Canada Bank deposit. We're going to date this June 30th just to capture it in the window of our filing. And we're going to give an example of a Staples refund. So one of the methods of inputting a debit card refund, we've talked about a couple of different methods already during the course, but is to just make it a bank deposit directly to the expense account. So we'll say that Staples gave us a debit card refund, and that was for office expenses. And we're just going to say that it's $100 and there's HST on that. And a lot of times, because it's the deposit screen, especially if we are entering this from the bank feed. So the bank feed likes to line things up for us. And if it feels like it's a deposit, it sort of pushes or prompts us to select the HST on sales. So this is a plant, the third plant that I've put in there for us to find with our GST HST checklist. So I'm going to go save and close, and let's go back to our GST HST checklist, work our way down and see if we can find those. So we're actually going to find them pretty quickly, because the first question is, do sales, that's line 101, on the GST filing tool match the P&L or differences confirmed correct? Remember, maybe there was MAT tax collected, or maybe there was an asset sold. So if there is a difference, we can be okay with it. We just want eyes on this to make sure that line 101 does reflect what we want it to reflect. So we're going to go back to the profit and loss, reports, standard reports, profit and loss. So I'm going to select the 3 months that we're filing for HST. So we're right now doing April to June. And so here is the total for income right now is 34218.28. Just going to duplicate this tab, and I'm going to go to taxes, sales tax. And I'm going to go to prepare return. And we can see that line 101 is 36,692.98. And here it's 34,218.28. So there's a difference. And you can see with these numbers, we can click on them and that pulls up a transaction report, but we can't click on line 101. But we can if we get at it in a different way. So this quarter, you might notice we have a new column that we didn't have last quarter. This is called the exceptions column. And what the exceptions are, I call them carry forwards. And what the carry forwards or the exceptions are these are things that changed from dated before April 1st, but that changed after we filed the period ending March 31st. And so if I click on this here, you'll see that we have this Staples receipt. This is the Staples receipt that was dated March that we put in earlier in the case study. And so you can see how this expense for March that we put in our case study, it was given to us in June after we had filed the period ending March for HST. And so what this carry forward or this exception report is saying is when you filed your HST originally, this wasn't there. Filed amount 0. And it has it in this way because it even captures if you changed something since the period was filed. So this is great. One of my favorite parts about the QBO GST HST filing software. And then it says, but now you've got in an expense with 254 HST, we're going to carry it forward into the current filing. So that's what that column is on the GST HST filing screen. So the reason I point that out is because this GST prepare return screen has 3 columns. It's got the amount for the current period, so any transactions dated between April 1st and June 30th are in this column. And then anything that has changed from a prior period, any carry forwards or exceptions are in this column for a total amount to be filed for the period ending June 30th. So when I say we can't click on this amount, but there is a way to do it, I'm going to pull up a report, but that report is only going to show us the first column. And that's important to know if you're troubleshooting why the differences might be there. So you might be looking at this total amount, wondering why your profit and loss doesn't match it, when really that could incorporate some exceptions. So what we're matching our profit and loss to is this first column. And even though we can't click on that total sales and revenue here, there is a report where we can. So back on the GST HST filing screen, in this current period to be filed, if we drop it down, this view summary, that's going to give us, again, just the detail of the first column, just what's currently in here dated April 1st to June 30th, which is what our profit and loss is showing. So we can now click on this total, and here we have a list of the detail of what's on that line 101, but the issue is it is grouped by customer. And the hack is we can change that grouping to group by account. Run report. And now we can shrink this up like this. And now we have something to directly compare to the profit and loss with. So you can see we've got garden center and store sales income, 18,503, and landscaping income, 15,565. Not only that, now we can see that there's extra stuff sneaking into this line 101. And again, we may be okay with it, we may be not okay with it. But knowing what the differences between line 101 is compared to the profit and loss is an important step when you're preparing to file the GST HST. So right off the top, gift cards issued, that should not be on line 101. We've already discussed that. And the reason that it shows up is because it's in this invoice right here. Remember, we planted that together. And we had said that on this invoice, we also sold some gift cards. That should have said out of scope. So you can see if I say save and close right now, and I regroup by account, run report, you can see that it is no longer showing as being part of the line 101 total. Let's continue down the list and see if we're okay with the difference or if we need to fix it. So the next one here is register cash. That is not on our profit and loss. And again, that is something that we planted together. You can see how whether it says 0 rated or exempt, both of these are going to show up on the line 101 sales. And this is one that I see actually very often. If maybe the business owner is depositing like $10,000 just to get some money going into the bank, if you say that it is 0 rated or exempt, it's going to show up on your line 101 when you go to file the HST. So let's go ahead and clear this one up. There's that exempt sales. I'm going to drop it down and just put it back to out of scope. And I know it says sales there, but out of scope really means like out of scope of the GST HST module. So we're going to go save and close. It's going to recalculate. I'm going to again group by account, run report, and we'll shrink it up again and move on down the list. So next here we see garden center and store sales income, 18,503.28. On our profit and loss, 18,503.28. That one's right. We don't need to look any further into that. Next one, landscaping income, 15,565. Let's come on over here, 15,715. There is a difference. So now we're going to expand this out, and you can see that basically all we need to do now is compare this list of numbers to this list of numbers. Now that seems easy enough perhaps for this example case study. In fact, building permit is jumping right out at us. But often you're going to have a list even longer, and going line by line checking the two lists is going to take a super long time. So here's another hack. We're going to go to columns, and I'm going to add a new column, two of them actually. We're going to add tax name and tax amount. So tax name and tax amount. And now what I can do is right away that out of scope jumps right out at me. It's in my face, but we can group them all together. So you can sort by tax name. And this is the way that you can just scroll down to the section where all of the out of scopes are together. And that is how you find quickly the difference without going line by line comparing the two lists. So here's that mic check invoice yet again, the one that we planted the 2 extra lines on. And we can come down, and then we can sort of decide what to do with this building permit. So it really depends on the situation of the business and the client. If it's a larger amount, you are going to want to go back to the client and reissue the invoice. Though if they're another business, they shouldn't mind, because another business, they can just claim the credit on their own HST return. But if it's not another business, it might be hard to go back to the client and say, I want more money, I didn't charge you the HST. It, again, depends on the situation. So sometimes what you might want to do, just to keep the payment to match the invoice total, is making sure if you make this inclusive of tax and then back the HST out of the charge, now you're compliant, you're collecting HST on your revenues, but that does affect your revenues, right? If the building permit did cost $150 and now we're backing out HST, let's switch this to exclusive, you'll see that now you're only getting $132 for it. So all things to be considered while you're fixing and correcting. You might want to say, 0 rated because it's $150, and you're like, if I get audited, then I'll just give them the extra little bit. That is a decision that you get to make. But what I'm showing you is how to find those issues in the bookkeeping before you go ahead and file the HST. So what I'm actually going to do is I'm going to delete these 2 lines now because we've illustrated finding them. I'm going to go save and close. And if we had just added the HST to that, it would have changed the total over here. But because we just deleted it to bring it back to how it was when we entered it, now the total is $15,565, which matches the $15,565 on our line 101 detail. So let's shrink this up. $34,168 still doesn't match. our total of $34,068. And that is because of this last line right here, office expenses. So down here, this is another thing that I commonly see is when there is a debit card refund, people will note that there's HST, but not realize that they've got the HST sales tax item. And as I mentioned, if it's the HST sales tax item, doesn't matter what the account is, QBO is going to include this amount on line 101 as revenues that were subject to HST. So all we need to do is, it's not going to change the net tax payable. It's just going to take this out of the HST collected, because right now HST collected is increased by $13. We need to move, this is doing two things. This is first of all, stopping this 100 from being on line 101 on the sales. And also, we don't want to see the $13 in our HST collected on sales transactions. We want to see this on our HST on purchases, the ITC listing total. So if I go save and close on this, you'll see that it is no longer going to be part of our total now on line 101. So that's gone ahead and done two things. It's taken it off line 101 and moved that $13 from the HST collected total and moved it to the ITC or HST paid on expenses total. But that was just a plant. So let's just jump right back to that. It was right here. That's just a fake entry that I was using. So I'm going to go more delete like this. Delete transaction. Now let's go back to our GST HST sales tax and come on over and see what is next on our GST HST filing checklist. So the next question is, does the payable amount on the filing tool match the payable amount on the balance sheet as of period end? So let me illustrate why that might be different. So there was one plant that I forgot to put in, but I'm going to put that in right now. It was this journal entry that we did for bad debt. And if you remember, I said that the GST HST, when you do a bad debt entry, needs to go to line 107. So what if somebody did not know that they had to even put sales tax on there at all? I mean, some people put this to HST collected, some people put it to HST ITCs. Either one is going to get it on the HST filing module, but what if you don't even know that you have to put any sales tax on there at all? So notice that if I say save and close, so right now I'm going to delete Felix's name just for a moment. If I say save, it's going to yell at me and say, you cannot save this. There it is. You cannot save this with an accounts receivable line without a name in the field. So let's put Felix's name back. I am calling out to QBO right now. You need to also say, you can't affect the GST HST Payable GL without putting a sales tax line item. Where is this to be mapped on the GST HST filing module? Look, I'm going to be able to save and close this, and QBO is not going to yell at me at all. It let us save it without putting in the GST HST tax item. And now, did you see that the amount here has now changed? Because now the GST HST filing module can't see it because we didn't say put this on the GST HST filing module. So right here, now it says $7,482.06. If we come over to the balance sheet, reports, standard reports, balance sheet, and it's important to say as of the end of the period we're looking at, so June 30th, and that is this period right here, April to June 30th. April to June 30th. So this number is what we're looking at. 748206. Over on the balance sheet, as of June 30th, if we were to scroll down to the GST HST payable, you can see that it's actually still $7,556.16. That's because we did affect the general ledger account with that journal entry, but because we didn't designate what line item on the GST HST filing module we wanted the amount to go to, it isn't captured by the GST HST filing module. And so now our balance sheet, our GL balance, is out of whack as compared to the GST HST filing module. Now, how would we find that? How would we search to figure out what was that entry that didn't have the correct GST HST assigned? So it's not always journal entries that are the culprit. I have seen in the past that there have been some integrating softwares or third-party softwares that put in entries without the GST in the GST drop-down box, but as a separate line in the invoice or the expense. And again, when that happens, you're going to get your module out of whack. So this is a way of just confirming that the integrations are working correctly. But how would we find that? Well, the usual culprit is a journal entry. So what I would do is I would come over to the balance sheet, and I'm just going to change this to just the filing period. It might be something that happened before the filing period, but right now we're going to limit our searching to within the filing period. And I'm also going to switch to classic view and making sure that the dates are still April to June. Let's come back down to the GST HST Payable. Click that open. And because I came here from the classic view, now I have that option to switch to classic view in this general ledger sort of transaction listing. And now we have the group by, because what we're going to do is we're trying to find all of the journal entries because those are usually the culprits. So group by transaction type, run report. Now that I've grouped by transaction type, I can suss out the most reasonable issue. So there could be other issues. I found other issues to do with like integration and items like that. But generally, the problem is if somebody enters a journal entry. So this journal entry right here, let's take a look at it and see if it's the problem. And indeed it is. And so now here is where we can come in and say this is going to be on line 107. Save and close. Yep. And now that we've saved that, if we come back over to our sales tax screen, let's just hit refresh. Now we can see that that line item has been recognized to be included in the GST HST filing module. And now the amount payable of $7,556.16 matches the amount payable on our balance sheet. Back to report summary. As of June 30th, scrolling down to the GST HST payable $7,556.16. Now let's move on to our GST HST filing checklist. The next item is review the ITC listing. So this is more just getting my eyes on what comprises the amounts that we're going to file. It's just cracking the hood, taking a peek. You can still miss things, but it's nice to know to be able to have eyes on what is actually being filed. So here is the ITCs. Those are the input tax credits, the HST that you've paid on your expenses. And I'm just going to crack open this list. And we'll push over the side here. So as I review the ITC listing, I'm looking for a few things. First of all, I'm looking at the names. If I see something about insurance, then I'm like, I don't think there should be HST claimed on that. And I'm also looking at the big numbers just to make sure there wasn't a typo that we haven't caught yet. So for example, Glass House, that's a big number. This is part of why we're having an HST refund this period, because Sarah purchased a lot of inventory and she also did some leasehold improvements. She's also paid for first and last on her rent, but also she purchased that truck. So these are big numbers that'll jump out at us for us to sort of yep, I can see why that number is so big, and that makes sense. So we're going to scroll down, and you can see that on those meals receipts, we're only claiming half of the HST, and we're you can see the details of that right in the ITC listing detail for the HST that we're filing. So I personally like doing it that way as opposed to doing an end of month adjustment. I find this quicker and easier to just have the tax code set up. And we're scrolling down, looking for the bigger numbers. Oh, there's a big one right here. Bonnie Car Automotive for $45,000. And this is another big reason that we're having a refund for HST this quarter. And so when you have a big refund that CRA might not be expecting, that is a potential GST HST review right there, which is why I say two things. If you're going to purchase a car specifically for the business, 90% or more, still keep a vehicle log. The vehicle log is going to be requested at the GST HST review when your refund is out of normal. And like the CRA is like, wow, look at that refund. Really? Let's take a closer look. And so I tell my clients, every time you buy a vehicle for the business, always keep a vehicle log, even if it's like 90 to 100% business use. I mean, even keeping it for 3 months to establish a baseline so that when you are reviewed by CRA, it's something that you can produce and show them. Another thing that is important when you're claiming a really large ITC is you're going to want to check in with your tax preparer, because there's some weird rules that you don't want to find out in a review or in an audit. So for example, with a vehicle, if it's a passenger vehicle, you're actually capped at how much HST ITCs you can claim. So you might not even be able to claim all of that $5,900. Now, in this specific case study, she can, because even though it's a crew cab, so it's passenger, it is actually a work truck. So there is a lot of squishiness in there. And what if this leasehold improvement also had something to do with her personal home? Anything like that. So because of these squishy scenarios and maybe some details that you might not be aware of with some of these larger credits, feel free to just send that purchase paperwork over to your accountant or tax preparer before you file, just for a second set of eyes to say, hey, we can claim all of this ITC, right? You don't see anything here that would give CRA a red flag or CRA a reason to say no to claiming that credit. So all that being said, we're scrolling down. Now, life insurance, that's going to jump right out at me, but we can see that actually there's 0 HST, it's 0 rated, tax rate is 0, none is being claimed on this filing. So that's another reason why you might not actually want to code things as 0 rated in the expense, even when they are, because now they're going to show up as a 0 in your listing of your ITCs. That's just a personal preference. I'm just pointing that out. So we're going to come on down, look for any other major things that could jump out. Insurance, loan payments. Sometimes I see people claiming HST on loan payments. Those might jump out at me. So we've had our eyes on the ITC listing, the big things we've checked with our accountant or tax preparer. That is that step off of the list. What is next on our checklist? So just now we've reviewed the listing of the credits we are claiming. Now we're going to review the transactions that we aren't claiming. So I am going to come over here and we're going to go to the reports, standard reports, and down in the sales tax section, now we can see transactions without sales tax report. We're going to crack that open. I'm going to change the period to the period we're reviewing, April 1st to June 30th. And my hack to make this a quicker way to check is I add one column. I add account name. Then what I do is I sort the list by account name, and this groups them together for me so I can look a little quicker at the things we have not claimed HST on. So we haven't claimed HST on accounts payable or receivable. That's good. We're doing it on the expense and the revenues, not the liability and asset accounts. Not on the advances or bank charges. We're not claiming it on the loan transaction. So in that bill, we had paid the bill with the loan as a line within the transaction. So there's no HST on anything related to a loan payment or using the loan. Savings in cash, register over under, CIBT line of credit. So this is how we can come down and say, oh, look, yep, no HST on disposal fees, none on the suspense. So we can quickly skim through and skip all of these POS clearings. Oh, here's one. The purchases and materials, there should be HST on that. Oh, it's just the $365 overpayment. Oh, and on this one, there was no HST on the honey. That was 0 rated. So we can keep on going down. Oh, there could be HST on that. Oh, that was a private sale, so her neighbor didn't charge her HST. And here's a note, the sales tax charged by MTO, that is not a refundable GST HST transaction. But remember, I did say we can talk to Sarah, the business owner, and I gave her the paperwork to claim back that $130 from the Ministry of Ontario. Excellent. So that's fine that there's no HST on that. And you can see wages, vacation pay, and now we're at the bottom. So that was a quick way just to make sure that we haven't missed claiming HST on any of our transactions. So a way that this has helped me in the past is I was reviewing work from somebody who used Dext to do the bookkeeping. The business owner had forwarded in an email from the utility company, the hydroelectric utility company, saying, you owe us like $900 on your account. And what had happened is they had accepted that as a bill, synced the bill into QBO from that email that just said this is how much you owe. But Dext didn't see any HST, and they weren't aware to back out the HST from that amount. And so because of that, no HST was claimed on that utility bill. And when I came to this report and I saw the utilities had been claimed without tax, I'm like, wait, hold on, that doesn't make sense. I looked into it, saw the attachment was just an email, and we were able to go back to that business owner and ask for the actual bill, see what the actual HST credit was, and we captured it from this method. So there's an example of why something might go in without HST and how using this report is just a quick way to sort of try and catch those items. So let's see what is next on our GST HST checklist. So the next thing is the reasonability review. So is the GST collected a reasonable amount of sales? So let's come back to our GST HST filing screen. And we're going to go to prepare return. And we can see that the HST collected is 4409 and the sales and revenue is 34068. So let's just do a quick reasonability. So 34068.28. And here's a little Chrome hack. I'm in Chrome. I'm just doing the math in the address bar. Just don't hit enter because it'll take you to Google to answer it. But it can answer it super quick for us here. Multiplied by the little asterisk, 0.13. And without hitting enter, I can see that the answer is 4,428.87. And here we have 4,409.43. So it's close, but it's not quite the same. Now, I'm used to seeing a little bit of variation. There's rounding on individual purchases, but this one's a little bit more than I usually see for rounding purposes. And the reason there's a variation in this quarter is because Sarah sold honey in her store. And honey is a 0 rated product. And so she didn't collect HST on the honey that she sold, that she had purchased from her neighbor. So in order for us to feel confident about this variation, we would need to go back to Sarah and ask her, can she print a sales report from her register, so in this case it was Shopify, that broke down what sales were subject to HST and what ones were 0 rated, maybe check the products are set up correctly. Now for me, right now, doing my reasonability review, I know she doesn't sell a lot of honey, so to me this variation makes sense. To me this is reasonable. Now I haven't checked it, I haven't cracked under the hood for her specifically, but to me this is a reasonable amount. I know she sells a little bit of honey in her store. So another reason this might not be 13% is if the business sells to other provinces. So if there was like e-commerce or they sold to different provinces and jurisdictions. So if you're in Ontario and you sell to somebody who's in Nova Scotia, based on the place of supply rule. So the place of supply rule says you charge the sales tax amount of wherever the goods take ownership. So if somebody purchased something from you and they organize the shipping, then they take ownership of it when they organize the shipping. So you can charge them your home rate. But most of the time for e-commerce, you're shipping it out to them. They don't take ownership of it until they get it. And when they get it, they're in Nova Scotia. So because of the place of supply rule, you'll need to charge, I think it's actually 14% now in Nova Scotia. I think they just changed, but you'll have to charge the Nova Scotia HST. Now we're only registered for GST/HST. So if we shipped to another province, say Manitoba, who have the PST and the GST not harmonized till separate, we're only going to be charging the 5% GST. Though, remember, if you are like selling to other provinces, because of place of supply rule, you've got to watch your thresholds in those provinces as well. Every province has a different threshold of once you cross this line, you have to register to collect our sales tax, whether you live there or not. So in terms of PST, if you're doing shipping to different provinces, just make sure you know what the thresholds are for each of those provinces. So if some products were sold to Manitoba, but below that threshold of where the PST has to be collected, and also, you're not going to file the PST on your GST HST return. So in those provinces, you're only collecting or charging the 5% GST. Also, if you're shipping to the States, well, in the States, they don't have GST at all. So that would be a 0 rated sale. Though again, you'll need to be aware maybe of the thresholds of the states. So this number might not be 13% for those reasons. And so if you want to be really confident in those numbers, you're going to want to go back to that profit and loss. Like I showed you how to add the column for the sales tax name. Now you can sort by that sales tax name, and then you can see, export to Excel, and you can see what portion was charged at 0 rated, what was like 5% GST, what was charged at the HST for Nova Scotia, and you can sort of then qualify why those differences are there. So some people might think you have to report to CRA when you file your HST, what portion of your sales were 0 rated and what portion was exempt. But as per CRA, it does say you don't have to give us this additional sales information. So it is optional. Though, if you are audited or reviewed, you are going to have to give the details of how the HST collected was calculated and what sales were 0 rated and what were exempt and what were 5%. But that's if you're reviewed or audited, so you do need access to that information. But when we go to file the HST, we don't have to say how much of this number is related to honey sales. So what we've done here is we have done a quick reasonability. If it was a larger amount or bigger numbers, I actually would want to see the detail to make sure that the HST was being charged correctly, because the amount is not the expected 13%. But I have done the 13% reasonability review. Let's see what else is next on the list. Now it says, is the GST HST payable comparable to the amount last period and last year? So we do like to just have a quick look to see how this compares to last period and how it compares to the same period last year. We can't do that with the Grand Gate Gardens. She's brand new. And here's something interesting. It's a refund because of all the inventory purchase, because of the asset purchases. And so because of that, I like to give her the heads up, hey, it's a refund this quarter, but don't expect it next quarter. Next quarter, you're going to probably be payable. So the next step here is prepare reports. Now this one isn't mandatory, but I find it extremely helpful. So what happens is when we file the HST with QBO, it gives us these static reports right here. And it's okay, we can sort of print it, we can probably try and cut and paste it. And it also gives us or saves for us the snapshot of the actual detail of what comprises that amount that's filed. Now, the first one we did just had one item in it. But again, it's like a static snapshot in time. You can see that in this snapshot, we don't see that March Staples receipt. These snapshots are what the numbers are that we filed with, not currently what's in QBO, what the numbers were when we filed them. And there are a couple of different reasons that I prefer to save these in Excel. First of all, I just find Excel easier to work with. I find it's easier to sort of troubleshoot with. And also, if we're going to no longer use QuickBooks as the bookkeeping software, right, we can export the whole file, like all the lists. We can export all of the attachments and the journals, the reports, but we cannot export all of these reports for the GST snapshots. Not in one go, not with one button. We would have to go to every single one of these files, and there's usually a lot. And we're going to have to click on View Summary and print, and then go back and then click on Detail and print, and do that. Oh, and then click on Exceptions and print, and do that for every single one of these. But most importantly, these GST HST filings in QBO can actually be undone or unfiled using the accountant tools. And if that were to happen, not only do you lose the snapshot in time, but you actually lose all of the exception flags, that all that information is lost, and it's practically impossible to recreate. And so by exporting these reports to Excel each time we prepare and file the GST HST, that means we're not relying on just these snapshots in QBO that can actually be deleted and lost if that GST HST filing is undone within QBO. And lastly, the way that I export the information to Excel, I also include the detail of what comprises line 101 sales. And as you can see in these reports, QBO does not include that snapshot. Those are two reasons that I prefer to export the detail of what we're about to file to Excel instead of just relying on the snapshots that QBO saves for us in QBO. So let me show you what that looks like. We're going to first of all go to the drop down to the View Summary, and I'll export this to Excel. And I actually want it to look like what the filing screen looks like. So this is a Naomi thing. I'm comfortable with Excel, so I Control-C, Control-V, Control-V like this. And the way that QBO exports this is a total, is a calculation. This is a calculation. So I'm going to make this current period, because that is what we've exported in this summary report. I'm going to call this carry forwards. And I'm just going to make that 0 for now. You can see just by making those 3 lines 0, oh, and the adjustments 0. So those 4 lines 0, everything else gets updated for us. And then on those 4 lines, I'm going to say that the total equals the current period plus the carry forwards like this. And I'm going to say equals this plus this for all 4 of those lines, equals this plus this, and equals this plus this. Excellent. So that's my first step. And I'm going to add a tab. And for this first tab, I'm going to put in the sales. So what does line 101 comprise of? We've already done that. We can click on here. I'm going to group by account, run report. And then I'm going to export this report to Excel. And what you can do is if you click not the A, not the 1, but that little square, it selects the whole sheet. I'm going to go Control-C for copy, bring over my main workbook that I'm creating, and I'm going to so A1 is where my cell is selected, Control-V, and then this tab, I'm going to call it Sales, and then I'm going to add a new tab, and this is going to be for the HST Collected. Let's go ahead and we can export that as well from QBO. Back to report summary. Here's line 103. Let's export that detail next. Export to Excel. And same thing, we'll click that little corner box. Control-C it, brought over the workbook that I'm building, and Control-V. And we'll add a new tab, and this will be the ITCs. Those are the input tax credits, the HST paid on expenses. Back to report summary. And so there's the ITC listing. We're going to export this one right here to Excel. And again, that little square in the corner, Control-C, bring over the workbook that I'm building. And here is the ITCs. But now we also have to go one step further and say carry forwards. You could type exceptions if you want. That makes sense too. But the exceptions, I'm not going to go back to report summary. I'm in the ITC listing and scroll down to the bottom. There is where I can get to the exceptions report. Down at the bottom is a link. And it was just the one, just the staples, but we're going to export that to Excel. I had to refresh because sometimes the export doesn't work on the exceptions report first time you click it. I don't know why. It's a QBO thing. So let's try it again. Export to Excel. There it is. And we'll cut and paste that one. We'll paste that here. And that's usually all I need to do, but because we have that bad debt adjustment, I'm going to put in the adjustments tab as well. And that's the last one we need to do. So I had to go the long way back to the summary report because of the refresh, but there's the adjustments. We're going to click on that one. And just a note, I like to have the memo or description show up. And with journal entries, in order to get that memo or description to show up here in this report, it's not reading this description here, it only reads the memo here. So if we haven't updated that memo, now's a good time so that that detail shows up here on this report. And we will export this one now to Excel. And we'll copy, Control-C, bring over the workbook we're making, and Control-V. And so next, I'm going to go back to the summary, and I'm going to put in the carry forwards. Now you can just point, you can say equals and point to the total, but I just copy it in from the tax filing screen on QBO. So let's go back to sales tax. We're going to go to prepare return, and I'm just going to copy in the exceptions of the carry forwards, and it's 254 on line 106, 2.54, and because I had gone ahead and fixed those totals, now it's matching 755616. That matches what this screen says here, 755616. And so now what I have is I have a workbook that has all of the transactions in there right from QBO, the date that we exported them. So let's see what's next on our checklist. Next on our checklist is confirm no balance payable on account and also no credit balance on account on the CRA GST HST account. Now that's with CRA. So if this is your business, you would go to CRA My Business account. But if it's not your business, you're going to want to go through the rep a client and access the account that way. So let's go over to CRA. So here we are, I'm in the CRA business account, and I'm going to go to GST. So the first thing I see is amount owing 0. Perfect. But here's the thing. If there is an overpayment or a credit on the account that might have been moved from somewhere else, you're not actually going to see it here. That is only how much you owe. If there's an overpayment or a credit on the account, you have to go one step further to view and pay account balance. And here's where we can see that the balance is zero. It's not a credit balance. If there was an overpayment or a balance owing, you can scroll down. And here is where you could see what periods that balance is payable or overpayment is applied to. So let's see what is next on the GST HST filing list. So the next step is send the business owner the financial and bookkeeping reports for the period with a note about the GST HST balance payable and when you will be filing the GST HST. So this is just a Naomi procedure. Everybody does things a little differently. But what I do with my clients is I don't file the GST HST right away. I give them 24 hours because there could be something on those finalized financials that makes them go, oh, wait, hold on. We had an event that, we got an extra $5,000 from our event. I don't see the event income on there. So with those final reports, I'll give them those 24 hours just to make sure that there's nothing that has been missed or overlooked. And when I send that to them, there's quite a bit that I send them. So coming back over to the Grangate Gardens month-end checklist, we can see that the reports that I send to the client, we've got the year-to-date income statement by month, we've got the balance sheet comparative, unpaid bills listing, like the final one. We had sent them the preliminary one for any questions, but this whole package is, and then the unpaid invoices, the final list of things that we didn't have receipts for. And also in the package, I'll send them a list of the finalized owner's drawn contributions for the period. I also then mention when the next GST HST is due, and I'll do this every month. So if I just finished their bookkeeping, let's say for April, I'll say, hey, your next GST isn't due until July, but that's going to be for April to June. And as of the end of April, you owe this much in GST and HST. Just so that they're not blindsided by that amount. They see it creeping up and they have it in their mind to make sure that money is set aside. And if it is in, for example, right now we're doing June bookkeeping. So I'll say, hey, your GST HST has been prepared to be filed. The amount payable is this much, due on or before this date. And I say, and I will be filing that tomorrow and sending you the confirmation of filing. And so by saying that I'll file it tomorrow, that means, first of all, they've got 24 hours with all of these reports before I file it. But further to that, when I actually do file, there's nothing cluttering up that email. It's like, I filed, you owe money, this is how much. So this is part of the Naomi process with my clients. And I also mention if the WSIB is filed or due to be paid at the end of the quarter as well. And I also mention if there's a balance owing on their CRA account. So back to this GST HST filing checklist. Prepare to file, sends the reports. So then we wait the 24 hours, then we can go ahead and we can file the GST HST on CRA. Now, when we file the GST HST on CRA, we are going to file it directly from this Prepare Return screen on QBO. We want to make sure that the numbers haven't changed, because if you printed this one day, filed it next week, and these numbers have changed, now what you filed with CRA doesn't match QBO, and that's a headache that I'm not covering in this course. I'm talking about preventative maintenance. Don't do that. File directly from this screen. Use these numbers on the QBO screen that we've confirmed. We also want to change the filing date to the last date of the period. And the reason I do that is because QBO, it's going to put in a journal entry that moves this refund receivable or balance payable from the GST HST Payable GL account to the GST HST suspense account. And Naomi, this is a Naomi thing, I like to see that done on the last day of the period. And that way we can see it go to zero on your GST HST payable. And if it doesn't go to zero, we can see that there have been carry forwards. I just find that it is more succinct and understandable when I'm looking at the balance sheet if the journal entry that moves this amount from GST HST payable over to the GST HST suspense GL account is done on the last day of the period. So I update that filing date. And then when you file the GST HST, you can follow the line numbers here. Line numbers here match the filing screen on CRA. And on CRA, under the GST section, which is right here where we were, you can scroll down, and here is where you can click File Return. And when we go to file the return, in the case of Grand Gate Gardens, this is just the goods and services return for registrants. And we'll hit Next. And you put the dates, so 04/01/2025, 06/30/2025. Scroll down, and you can look at these, but we're not filing a nil return. Here's that option. If we wanted to separate out the exempt and zero rated supplies, we could check this off. But again, we looked at that link. We don't need to do it. And this section is usually pretty unique situations. If there was like a First Nation sale, residential property rebate, these you can read them, but in the case of our case study, and in a lot of the GST HSTs that I file, none of these apply. We just need to go ahead and click Next. So we would file those, after we hit Next, we would file the numbers as per these line numbers right here and make sure that this balance matches what we have ready to file. And then once we file on CRA, we're going to jump over to QBO and we're going to mark as filed the very same time. And we want to do it at the same time, like I said, to make sure that the numbers in QBO match what is filed with CRA. And then if anything changes, those exceptions are going to be captured by QBO and carried forward to the next filing. So here are the snapshot in time reports that QBO saves for us. You can see it's not capturing what line 101 was comprised of, whereas we did on our spread workbook. But other than that, it's pretty similar. Not as usable as Excel. And like I said, if we were to migrate to another bookkeeping software, we would have to print every single one of these, not just the main one, not just the detail, but you have to go for each of the periods that you filed. You have to do both the GST detail and the exception detail, print each of those for every single one of the periods that you filed. So coming back to our checklist, we can see we update the filing date. We file on CRA directly from the QBO screen. We mark on QBO filed the same time we file on CRA. We download the confirmation from CRA, and then we send an email to the business owner with that confirmation attached, the amount payable and the due date. And I say, your HST is filed, confirmation attached, amount payable is this, due on or before, the payment is due on or before this date. Now, the last step here says download a backup of the company file. Again, this is optional, but it's something that you might want to do if you have the space for it. Up here in the cogs, we can, under Tools, export the data. Now, this truly is a snapshot of all of the general ledger transactions when we filed the GST. And again, it doesn't save that snapshot PDF. So I generally don't do the profit and loss and balance sheet, but I'll do the rest of these. And you can also do the lists as well if you're actually migrating and you want a list. So we're going to go export to Excel. And that is now a zip file, all zipped up, and we can just keep it zipped up and save it alongside the workbook and have a full snapshot of how everything was when we filed the GST HST. So that is it for the GST HST filing checklist. I did skim over pretty quickly the things that I send to the client. What I do is I'll send the year-to-date income statement or profit and loss, but I'll split it up by month so they can see how much so far and then also how much each month. I'll send that balance sheet with the end of this month versus the end of last month. I resend the unpaid listings, the unpaid bills and the unpaid invoices, because when I had sent them earlier, it was before any changes that might need to be made. I also send the finalized listing of what we don't have a receipt for, just so they have that as part of their package, and the final listing of any of the owner's draw contributions or shareholder loan draws contributions, if they are incorporated. And as I mentioned, I do say when the next HST is due, even if it's not like the current month that I am working on. And so that is it for the end of month checklist and the GST HST filing checklist. And with that, June week number 5 is done. This is the final week of my 2025 Grand Gate Gardens case study. I hope you found this case study helpful in the building growth and success of the business you are working in and on. Now, if you're interested in downloading the case study source documents, or if you have any special requests for topics you'd like me to cover in future case studies, you can find out more information in the link below. If you found this video useful, don't forget to subscribe to my channel. I'm also on Instagram at BeThatBusiness, and you can tweet at me, X at me. I'm at NiftyNomi, and I'm also at NiftyNomi on Twitch and TikTok. And you can find resources and courses about running a Canadian business on my website, naomiwilkins.ca. I love making business make sense. The video today was recorded in beautiful Oshawa, Ontario. Thanks so much for watching, and get out there and be that business that thrives.